We're looking at the mainland markets coming online. It was some economic data that was weighing on the market, showing, of course, this continued weakness in China. What do you make of what we see for the Chinese and the Hong Kong markets so far?
Well, Emily, briefly last week, there was a moment of euphoria when I think there was some rate cutting and also some promise to extend down mortgages, allowing households to take out more money from the real estate sector. But that quickly reverted, as you pointed out, because we saw some weaker PMI numbers suggesting that the private sector continues to contract. I think until we see consumer start to spend money and corporations start to actually do something with a lower cost of capital, I don't think the market will see the end of this bear market.
All right. What we're waiting for the consumer. We heard from Meituan in their report card, and they're seeing some strong response in terms of consumption. This is the big super app, Meituan. And is this an encouraging sign? Meantime, we have the likes of Pinduoduo, of course, flagging slower growth ahead as people looking for bargains on their app. Of course, Temu. Which side is it that you're on?
Well, I would say it is definitely a mixed picture. But what is true is that the only place we're seeing growth in consumption is really what's called a consumption downgrade, meaning the higher end premium items are not getting any love from consumers. If consumers are spending, they're going for deep discounts, they're going to goods that actually leave too little profit margin for the platforms and for the manufacturers. So yes, we are seeing some spots of growth if you're able to be the low cost leader. But broadly, I would say for the average retailers, margins has been shrinking, even if they're seeing some uptick in volume.
Jason, when does the data start to look conclusively better? And I know that I may sound like a broken record in this one, but that's really what market sentiment is hinging on.
Absolutely. I think the market sentiment has decided it is going to ignore sort of policy proclamation out of Beijing. I think it's interpreted as too little, too incremental. And so it really does have to come down to actual response, basically seeing corporate sector spending and seeing consumers willing to spend, not just in the cheapest, lowest margin items, but broadly willing to spend.
Right. And I wonder, how do you push forward the whole consumer confidence story? Do you think cash vouchers in any small way are the answer, even if they come out with an intermittent plan and don't go all the way with helicopter money? Because I know that would have inflationary effects, and it obviously creates a problem with money supply in the economy. But something of like a token handout, so to speak, just to get the consumer going.
We have seen that to work in other Asian economies. We've seen it in Taiwan, we've seen it in Japan. So, I think that is something worth trying, right? Because if you simply increase, I would say, liquidity, if no one is tapping into that to spend, it doesn't really help, right? You now have to force households to spend. So I think for the consumer sector, something like a spending voucher, for an economy that's going through a deflation, I think is not a bad idea.